Hey traders, this is Ron Haight. Hope you guys are having a fantastic holiday season. Wish you and all your families the very best. As always, everything in this presentation is for educational purposes only. We'll kick off here with a daily chart of the S&P 500, the SPY. Now, I didn't do videos the last 2 weeks, one because of the holidays, and two, the market is just moving higher, and that's typically what it does this time of year, which goes into a question I received. The market just seems to be going higher with all the potential craziness that's out there. But two things. One, the trend is your friend until it isn't. Otherwise, you end up missing everything. And two, this time of year, when I was flagging stocks for you guys back in August, September, October, and doing my open houses, I said, get ready. November into the middle of December is one of the two best trading times of the whole year. There's usually a market melt up. We take about a 2-week break into the end of December, in aggregate. And then January 1st, it's light a fire, and here we go again. So far, November literally could have made your trading year in a matter of 4 weeks. That's how crazy good this is. So if we look at the spiders itself, is it a shock that we break out to new highs in November? Nope, sort of expected it. And right now we're above the red line, which is the 20-day EMA. It's a really nice end of day trailing stop, gives you a visual representation also what's happening, which is we're going higher right now. And the orange line is your institutional line, the 50-day SMA, simple moving average. We get below there, that's more of a concern. We had a break in September and a break in October, but you just wait and look what happens. As November comes, there goes the surge, and then here we go. It's really interesting. Now, with all that said, if we get back below the orange line, we'll raise a flag, and we'll just have to see if there's bigger volume coming in or not. Dow, same thing, all-time highs. Take a look at the Russell, breaking out, very, very bullish. Q's breaking out, all-time highs. These indexes are on fire in a time when they typically do just that. Now, if you remember, there were a couple stocks I told you guys to watch when we got into November. One was Disney. If I zoom in here, there's November. We crossed the orange line, that institutional line in the sand. Disney explodes higher. It was 20+% move. This was 190% call win in under a month. I think it was 29 days. You go to something like FFIV, as we got into the end of October, beginning of November, from here to here, the stock was up, I think, 30% or thereabouts. The option contract was a 300+% win. And then if you look at Network Appliance, which was the latest one on an earnings move, but it ran before earnings like it usually does. This thing was up about 250%, and then you even had the earnings spike too. How could we expect NTAP to have a good reaction to its report? It's typically what the big money does, and they were even buying it a couple days before earnings. It's almost like they knew what they were going to do before they did it. And in a matter of a month, those three stocks could have literally made your trading year. So November has been amazing. A lot of you guys knew to get ready for it. You knew the stocks to watch. I'm going to be doing probably some more open houses towards the end of December to get ready for January, because that's the next massive window. So we have like 10 days yet of typical bullishness, then a 2-week siesta into the end of the year, and then it's usually fireworks. Now, with all this coming about, there's still the election, there's still COVID, there's still other things that could happen. Who really cares? The trend is your friend. Otherwise, you end up missing it. So keep an eye on that red line. That'll be the first sign of trouble. Orange, the next big one. All right, let's go look at some individual stocks that are typically asked a lot about. One is Apple. Apple does not have a big seasonal bias either way. It's just biding its time after a 4-for-1 stock split. This is still really bullish action. There's nothing wrong with Apple, but it needs to break above maybe 125 before it can get up there and challenge the highs. Otherwise, just watch the lows. We still have higher lows, but if that were to change, that would be a sign of a change in trader sentiment. Amazon, almost doing just like Apple. You have lower highs, you have higher lows, It's a pennant. We're still waiting for a bigger move. I would watch for one of these swing highs to be broken for a sign. If that happens on big volume, that's where it even gets more interesting. Tesla broke out of this nice little pennant. We broke out here on 1118, and then it's just been boom, boom, boom. The red line would be considered near-term support just because it is a moving average. We get below there, then we go orange, but Tesla's breaking out. NVDA, sort of like Apple and Amazon, going nowhere fast, but just look at this thing, 180, 580, craziness, right? But it's not giving up any real estate. Goes back to that question, is the market irrational? Yeah, maybe it is. Maybe it's not, depending which you believe. I still think the stock market can go tremendously higher as there's a flight to safety, if you will, into the US stock market. And that's already, I think, creating valuations that are nuts. But do you want to have your money in a bank in Europe where it's paying negative interest? Do you want to have it here or there? Or you want a company that actually does something, right? And that's what's sort of attracting, I think, some of its capital. At least that's my best guess. It's the largest, the biggest, most liquid market in the world. You just can't, nothing wrong with the Australian markets or the European markets, but there's not enough liquidity there, unlike the US, which has tons of liquidity. How about Adobe? Some other stocks we want to get ready for the new year. Adobe's perking up a little bit here, but it really doesn't start to run until January. Right now, it's just in a big old trading range, lulling investors to sleep, which we love, because no one's going to pay attention to it when the breakout starts. Here's Netflix doing the same thing. October, November, December, it's just dead money historically. Watch January. Gold, another one I got asked about. We got to wait till basically around Christmas or so. Gold put its peak in the summer. I told you guys be very, very wary. Look what happened in July. We get this summer explosion. And I had questions on it, like, well, maybe this year it's not going to really top out over the summer. I said, who knows? But you got to wait and see. The summer rallies usually don't continue all year long. And then we get the gap down, we go back up, fill the gap, and then it's just been a drift lower. We had a shakeout to the upside in the beginning of last month in November, and I got more questions on it. My reply was, hey, maybe gold does want to go this time of year. Nothing says it can't, but typically the big money is not supporting it unless there's a fundamental change. And we had a 2-day move and it instantly reversed lower. We've had a bounce the last couple days, but we're still about, I'd say, 4 weeks away from prime time. Had a question on bonds. It's just a slow death. A slow death. You know, they're talking about only paying interest. You don't get the capital back. And there's a lot of crazy things. I think bonds are one that can really get whacked here. But right now they are technically bearish. I will zoom in though and show you that we did close above the 50-day, which is something we really couldn't do previously for about 2 months, but there was zero follow through. That tells me the next time we cross up through the 50-day, it's trust but verify. I would now want to see a second day and frankly closing near the highs of the day to show that there's a change in trader sentiment here. And one final question on EA. This thing could not get above the 50-day. Well, let me zoom out actually, jumping ahead. Here we got above it, sort of back tested, did back test. We break it, breach it. Resistance, 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 resistance. Now we break through on the first attempt and look at that volume. Now we're coming back down, almost back testing it. This to me looks very, very interesting from a breakout perspective. If we can clear, there's horizontal resistance for what it's worth around 134, upper 133s. You can see the price there. Above 134, it's a straight shot into the 140s, which is another 10 bucks or so. But right now, if I was short EA or bearish on EA, this would get my attention that I'm wrong. Very good possibility I'm going to stay wrong because that volume's coming up and you're now staying on top of 50-day. You're bouncing up. Change in trend there. So that is it. I had some questions about the holidays coming up. What am I going to do? I would expect to do a video next Sunday, probably one on the 20th, but I don't know about the 27th. I may not do a video there unless there's something dramatic happening in the market, but there just isn't. This is melt up time, market pushing higher, and not a whole lot to say other than seasonality has been an amazing occurrence again for a lot of traders this November. All right, so again, happy holidays, happy Hanukkah, Merry Christmas, Happy New Year, Happy Kwanzaa. We'll see you guys in the next video. Take care.